Hey everyone, welcome back to Corporate Decoder, the place where we dissect financial documents to uncover the untold stories behind the numbers. Today we are looking at Helios Technologies Incorporated and a recent filing that might just reveal some interesting shifts within the company. So, what is the big news from Helios Technologies? We are diving into a report that details a key leadership change and what it means for the company's future direction. Alright, let's get straight into it. This filing is all about an important announcement from the company's board of directors regarding a new president for their electronics segment. This is not just a minor shuffle in the executive ranks, it signals a strategic move as the company looks to grow and innovate. The main event here is the appointment of Billy Aldridge as the president of the electronics segment. Now, this role officially kicks in on the 4th of January of next year, 2026. This is a big promotion for Mr. Aldridge, who is no stranger to Helios Technologies. Before this new role, Mr. Aldridge has been serving as the Senior Vice President and Managing Director of Electronics since March of 2025. Before that, he was the Senior Vice President and Managing Director of Innovation Controls starting in 2021. His career at Helios actually traces back to 2008 when he joined F.W. Murphy, which is a division of Innovation Controls. He really cut his teeth in sales, growing their marine market business. Then he moved up to director positions and eventually became Vice President of Business Development. His experience also extends beyond Helios. He spent time with Mercruiser Mercury, part of Brunswick Corporation, where he gained valuable skills like Lean Six Sigma and worked in various areas including supply chain and program management. He holds a bachelor's degree in sociology from Oklahoma State University. This is a seasoned executive with a deep understanding of the electronics and controls business, which is crucial for leading a major segment of the company. Now let's talk about compensation, because that is always an interesting indicator of a company's valuation of its leadership. Mr. Aldridge will receive an annual base salary of $300,000. That is a solid, respectable salary for a top executive. Beyond his base pay, he is eligible for incentive programs. His short-term cash incentive target is set at 60% of his base salary. This means he could earn an additional amount based on short-term company performance, essentially rewarding him for hitting immediate goals. The really significant part of his compensation package is the long-term equity incentive, or LTI. This is targeted at 110% of his base salary. This means a substantial portion of his potential earnings is tied to the company's stock performance over the long haul. This aligns his interest directly with shareholders. It also shows the company's confidence in its long-term growth prospects. Breaking down this LTI further, half of it is expected to be in restricted stock units that vest over time. This encourages him to stay with the company. The other half is performance-based equity, meaning he'll earn it only if the company hits specific, predefined performance targets. This is a common and effective way companies incentivize executives to drive significant value. As part of his appointment, Mr. Aldridge will also enter into the company's standard legal agreements. This includes an indemnification agreement, which essentially protects him from personal liability for actions taken as an executive, provided he acted in good faith and in the company's best interest. This is pretty standard practice for senior executives. He will also sign an executive officer continuity agreement and an executive officer severance agreement. These agreements typically outline what happens in specific scenarios, like a change in control of the company, or if his employment is terminated under certain circumstances. They provide a level of security for the executive and ensure a smooth transition for the company if such events occur. The terms of these agreements have been previously disclosed by the company, so it is not introducing new or unusual clauses. The company has also attached a press release to this filing that announces this appointment. This is a way for the company to officially communicate this news to the public and investors, and it is incorporated into this filing by reference. Now, what does all this mean? The appointment of Billy Aldridge to president of the electronics segment, coupled with a robust compensation package focused on long-term performance, signals a clear intent for growth and stability in this key area of Helios Technologies. His extensive experience within the company and the industry itself suggests a strategic decision to place a proven leader in charge of driving future success for the electronics segment. This is not just about filling a vacancy, it is about empowering someone with the vision and capability to steer a significant part of the business forward. The emphasis on long-term equity incentives is a strong indicator that the board expects this segment to deliver substantial value over the coming years, and they want their top executive directly invested in that success. The fact that the continuity and severance agreements are standard also suggests a focus on predictable processes rather than any unusual arrangements. Looking at the broader picture, this move by Helios Technologies appears to be a confidence vote in their existing talent and a clear strategy to leverage internal expertise for future growth. It speaks to a company that values experience and is willing to reward it significantly when it comes to leadership roles in its key operational segments. While this filing doesn't contain detailed financial tables to dissect for trends, the leadership appointment is a strong signal about the company's direction and its focus on strengthening its core business. It is a move that should be seen positively by investors who value stability and experienced leadership at the helm of crucial business units. Alright, that is our breakdown of this Helios Technologies Incorporated filing. What is your take on this leadership change and what it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and don't forget to subscribe for more deep dives into corporate filings. We also have a Discord community linked in the description below where we discuss these insights further. Thanks for watching, and we will see you in the next video.